Binary options are a unique type of financial contract. Let's look at how they work and why they are different from traditional stocks. The term binary refers to the fact that there are only two possible outcomes for the contract. You either win or you lose. Unlike buying a stock where the price can move in any direction, a binary option is an all-or-nothing proposition. You choose an asset, like a currency pair or index, and guess if the price will be above or below a certain point by expiration. Traditional stocks represent ownership in a company, while binary options are simply bets on price movement within a strictly defined time frame. This chart shows the potential loss risk. Binary options often carry a total loss risk, whereas stocks allow you to hold through volatility. Regulators consistently warn that these instruments behave more like gambling than traditional investing due to their high-risk nature. Always do your own research before trading. Thanks for watching and stay informed about the risks in the financial markets.